Home prices hit another record high. Holy shit, when is this going to end? Prices are going higher and sales are stalling. So what the heck is actually happening? There's a few things going on that are really important, and there's something looming that is going to cause even more sales to stall. First, we've reached a new record price for the median home here in America at $419,300, up 5.8% from last year. And with that, people's mortgage payments are double what they were just 5 years ago. Sales of previously owned homes, so resale homes, are at a 30-year low as so many people are locked into low interest rates. With interest rates so low, people are not moving. When people don't move, inventory stays very tight. When inventory stays very tight, prices go up. It is really that simple.
What is going on, guys? JC Nita here, property owner, investor, and online content creation dabbler. And today we're talking about how in 2025, it does not appear like the housing market is going to get any better for buyers.
1 week left in 2024. Housing remains a key issue heading into the new year. Consumers will continue to try to navigate both of these things. High mortgage rates, though, and high prices. I want to bring in our next guest to discuss what to expect in the new year. Did you see there's a story, by the way, in the Journal, is it this morning, that says that your mortgage is not actually even your biggest cost anymore? Did you see that?
32% were paying more than half of their mortgage payment to property taxes and homeowners insurance. Pretty troubling.
As it portends for 25, what do you see?
I think more challenges. We haven't seen any relief on the stretched affordability issue, and that's only getting worse as mortgage rates remain elevated and are going higher.
What do you think the rates will be for the next 12 months? What do you think like the average homeowner should expect if they were going to go try to buy a new home?
I can't imagine why rates would go much lower from here, especially with some of the Trump administration proposals with potential risk of higher inflation. So I think that right now we're looking at the affordability index is probably about almost 25% above trend line for existing homes and about 10 to 15% above for new homes. So I think today it's really troubling for the entry-level buyer. We are seeing more resilience for the higher move-up segment, especially those that are able to use cash, but it's a challenging market.
So a few different things that were touched upon there that we're going to break down in the video and go over. One of those things is higher interest rates. Another thing is higher insurance. Another thing is higher home prices. And they also mentioned something there that was very interesting and also very scary, is that a large portion of people are paying more in their interest and their taxes than they are for their actual mortgage. And another thing that they talked about there, which I do want to address, is that they said this is not having such a big effect on people who have more money, higher income individuals, which is almost like Captain Obvious. If you have more money, that means you can either put a larger down payment down or you can buy a house in cash, which means you don't have a mortgage at all and interest rates don't really affect you. But you still have to deal with the higher property taxes and you still have to deal with the higher insurance. I will say this, since COVID has ended, prices have remained high. So what happened during COVID, inventory of homes was still low, but interest rates were also low. And so you had low interest rates and low home prices. What that did was create a lot of demand and people rushed to buy homes. And if you remember Economics 101, whenever you have high demand and low supply, the price of that good, in this case a home, is going to rise. And so now what we're dealing with after COVID is that the prices of homes have remained high, but interest rates have also come up. So it's putting a lot of pressure on people like me and you who are looking to buy a home, because now the same home we would have bought 5 years ago is going to cost us a lot more because interest rates are so high and inventory is still low.
We're no longer having a view that mortgage rates are going to go to the fives next year or even the following. We believe mortgage rates will stay at around the 6% range for the next 2 years. As a result, next year, I would expect prices to go up 3 to 5%, units probably another 5%, but I don't think we're going to see a big jump in 2025.
Did you have high hopes for a 5 handle?
I did 2 months ago, before the election. That was the view back then. But then with the election, the view between tariffs, that in inflationary policies, that the 10-year would actually increase and not decrease at the same level that we previously thought it would.
But you have come on the show before and talked about the 5 Ds, and life goes on, and sometimes you have to move. It doesn't matter where the markets are. Where do you stand on that view? How much friction will there be if rates are stubborn?
Yeah, again, I think the market will improve. Even now, pending applications to purchase a home are up 10% year over year. We had today on a year-over-year basis, the purchase mortgage applications are up 6%, prices are up 5% year over year. And so I think things are improving, but very modestly and off a very low base.
He's saying that rates are going to go up a little bit. They're not going to come down like a lot of people hoped. And he's saying that the units, meaning inventory, is going to increase a little bit and that demand is going to stay relatively steady. So essentially, we're going to see 2024 all over again, according to him. So it's not as bad as saying, okay, it's going to get worse, but it's also not saying that things are going to get better. So if you're like me and you're looking to purchase a house in 2025, although I can't predict the future and I'm not giving financial advice, I'll say what I think is I should expect to be paying a 6% interest rate for whatever property I look to buy or more. I have good credit, so hopefully I can get it down and shop around, but the hope that interest rates are going to come down to 5% or even 4% seems like a pipe dream at this point. And inventory, while I do see a lot of the construction going on around where I live, a lot of that construction was already started years prior, because that's how commercial real estate goes. They don't just build a house and plan it the year before and get it started. These things are in the works for a while. So we'll see what happens. But nonetheless, it still holds that interest rates are pretty much through the roof, pun intended.
I'm here in Shorewood, which is known to have some of the highest property taxes. Its 2025 budget will bring a 6.77% property tax rate hike. So I came to Shorewood to talk to neighbors to see how they feel about it.
I don't think anybody wants to spend a ton of money if they don't have to.
It's going to sound crazy, I suppose, to a lot of people, but I don't think it's that high.
The 6.77% property tax hike approved by the Village Board is designed to fund vital infrastructure upgrades.
6.7% is going to be a little bit high, but I know that all of those things are important.
Then when you consider the services you're getting for it, it's reasonable.
The rate hike is needed to fund overdue projects like lead pipe replacements, a new public works facility, sewage system repairs, and streetlight replacements.
I've seen streetlights go in and out here and there. A lot of the older buildings need lead pipe replacement.
That'll cost me, but what are you going to do?
They say Shorewood has some of the highest property tax rates.
Yes, but we get really good services, so no complaints about that.
It's an old village, and a lot of this stuff is the original, and then also some of it is a requirement to the federal government.
With debt stabilization funds exhausted, the increase will add about $175 to taxes on a $340,000 home.
If you defer costs, then you got to pay for them at some point.
So in this case, the property taxes are going to be used to upgrade things that need to be upgraded for health reasons, for example, like lead pipes. That makes perfect sense. What happens is the problem is where taxes go up just because property values have gone up. So for example, the other day, my dad called me and he was kind of angry. And I was like, Dad, what's going on? He's like yelling. And at first, my dad doesn't really yell. He's a very cool, calm, collected man. So once he kind of got his initial anger out, he told me that he received a letter in the mail for escrow, and his escrow, like every year, has increased because there was a shortage in the amount that he had in his account. Essentially, the same thing happens to me each year too with the properties that I own. I get a letter in the mail and my mortgage servicer is saying, hey, you had a shortage of this much, which means we're gonna either spread it over the year or you can pay a lump sum. And typically I just pay the lump sum because I don't want my mortgage to increase too much. But that being said, a lot of times those increases are based off the value of the property you own increasing. So it's not because they're going to replace pipes or they're going to pay workers to fix the sewer line. It's because they did their assessment, which where I'm at is every 3 years, and determined that the house value is more now because there's construction going on, the roads have been improved, whatever. So really, that's not adding much value to me or to my dad for that matter. What it really is just causing us to have to pay more money for the same house. Similar for insurance as well. He did make a good point. He said he's owned his house for 20 plus years, almost 30 years now. And he said not one time, knock on wood, has he had to file an insurance claim. Yet he pays that insurance every single month. Now, obviously that's how insurance works, I get it, but it can seem a little bit just disheartening sometimes. So nonetheless, if the tax money is being used for good reason, like these residents said, I can see how, okay, I can get with that. But if it's just that, okay, my house that I bought 25 years ago is now worth more because home values in the area have risen for various reasons, that doesn't mean that I should be paying more taxes for that. The last thing that I want to touch upon here is something that the woman in the first video mentioned, which is that some people are actually now paying more money for their interest and their taxes than they are for their mortgage. So if you are not familiar with how it works, if you never owned a home before, there's principal, there's interest, there's taxes, there's insurance. Sometimes you have HOA, sometimes you have fees for your condo association, but those are the big four: principal, interest, taxes, insurance. Normally your principal and your interest, you're paying more than you are your taxes and your insurance. But in this case, the study says that 32% of homeowners are paying more than half of their mortgage or more than half of their monthly payments to their taxes and insurance. So according to this article by the New York Post, Homeowners are paying more for insurance and taxes than their mortgages, according to this study. Home insurance prices have skyrocketed as natural disasters and the rising cost of repairs have driven up rates, while property taxes have surged as the value of homes have increased, as I mentioned before, according to analysis by the Intercontinental Exchange. The combination resulted in 32% of the average single-family mortgage payment in September going to property taxes and home insurance, the highest rate ever for data going back to 2014, which is pretty mind-boggling. Now, it does say that the burden hits hardest for people that live in New York towns of Rochester and Syracuse, as well as in Omaha, Nebraska, New Orleans, and Miami. And that makes sense for a lot of reasons. A lot of the homes in those areas are a bit older, so you would imagine that taxes to fix up the pipes, like they said in that video, are going to be more expensive. Or I guess when it comes to insurance, it might be more expensive to replace the house, but I would imagine it'd be more expensive to replace a newer house, but I could be wrong about that. If you know in the comment section, let me know. But nonetheless, that blows my mind that some people are paying more for taxes and insurance, because the whole point, not the whole point, but a really big reason to buy a home is so that once it's paid off, it's yours, and all you have to worry about paying is the taxes and the insurance. And like I said, maybe an HOA and maybe some upkeep. But if you pay off your house and you're still having to pay a huge monthly bill because the majority of what you were paying goes not towards principal and interest, but towards taxes and insurance, it's almost like, why not rent? Now, of course, you have to look at the numbers, and depending where you're at is going to be different. But if you're going to be paying $2,000 a month, $3,000 a month between property taxes and insurance, and rent is $2,500 a month, well, I mean, why not rent? Because property taxes and insurance never go away. Unlike a mortgage, it goes away once you pay it off, if you pay it off. So with that being said, guys, very interesting times that we're in. If you're in the market for a home like I am, let me know in the comment section how you're feeling about it. I'm kind of nervous. At the same time, I'm looking forward to it. I know that no matter what, it's never really a great time or a bad time. Hindsight's always 2020. Would I have preferred to purchase a home back in 2020 when inventory or when rates were low and home prices were relatively decent? Sure. And actually I did. It was just a rental property. But again, hindsight's 2020. Let me know. With that being said, if you made it this far in the video, I really appreciate you for sticking around. If you enjoyed it, feel free to give it a like and to subscribe, as it really does help with the YouTube algorithm. And until next time, make smart financial decisions.